Hello active traders, this is Ken Calhoun from TradeMastery.com. I'm going to share with you the single biggest difference or improvement that I found in my own trading the last couple of weeks, and that's how to use conditional orders. And specifically, one triggers the other orders. What it does is help you stay out of trouble by automatically putting in your initial and trailing stop once you put on a trade. And let me share with you an example of how that works. Let's take a look at this TIVA chart. See how it's right near 18? Well, let me share with you a conditional order and how that looks. Again, I'm Ken Calhoun, TradingTheOpen.com and Trade Mastery. For my live room, be sure to visit TradingTheOpen.com and give it a try. I'm sure you'll be impressed. I've ran the room here since the year 2000, so working on our 20th year. As always, all information is for educational use only. So the way that it looks like, at least in my Fidelity Active Trader account, is this. You put an order, and I put in this order today in preparation for tomorrow's trading. I'm recording this here on Monday the 18th. I put in a buy stop limit order, so it'll fill me if it gets over 1820 up to 1830, and simultaneously, this is where it gets interesting. Simultaneously, once your order gets filled, it'll put in the order to trail and put your initial stop in automatically. What that does is protect you against, you've probably all been in these kind of trades where it goes up, you get in the trade, and then it falls and drops back down again. And either you take a stop loss or you sacrifice profits unnecessarily. This is a very valuable strategy to use. Now, note that this is on Fidelity. It'll look different, say on Thinkorswim or Interactive Brokers or whatever order platform or brokerage you're using, but think about one triggers the other orders. It's an extremely valuable technique. I made much more in my winning trades financially the last couple of weeks using these OTO orders because they automate your process. I'd been aware of them in the back of my mind the last 20 years, but I never used them because I thought it was kind of too complicated. The exact opposite's true. So for example, here's an example of an actual trade I did last week. I was in this guy TLND, and I got nearly 1 point win out of it, but if I hadn't had a trailing, I think I used a 40-cent trailing and initial stop, it would have taken all my profits back. So you can profit on the way up, and then once it starts to drop, the trailing stop kicks in, locks in your profit, right? Or if it just barely goes through your entry and it immediately starts to go against you, at least you got the discipline in place to have a trailing stop, your initial hard stop set and activated automatically. And that will save me countless hours of time and effort because it saves you from having to constantly check, hey, did I get an order fill? Am I live in that trade or not? And if you trade as many thousands of trades and as many millions of dollars worth of stocks and ETFs over the years as I have, it will be a huge time and money saver. So, and it's just one triggers the other, OTO, order flow. So look into it. Because I made nearly a point on this guy on the way up, and the OTO order protected that point. If I had just let it ride, I would have wiped out all my profit and then ended up with the stop loss. So if you get in on the way up, having an OTO gives you enormous peace of mind in the back of your mind that your exit is covered for you. Okay. In this TIVA example, for example, I'll buy it tomorrow, assuming it doesn't gap way up, but if it opens up, say, somewhere here, I'll buy it over 1820, and again, with an initial stop, if we take a look at the order flow and how that's set up, remember the chart in the back of your mind, it's got a 20-cent trailing / initial stop automatically set up. So if order A executes, where I get filled on just 100 shares worth of 1820, it'll automatically put in the trailing stop order for 20 cents under the inside market based on last, and you can choose whether it's based on last or the bid or the ask or whatever you want. And the most critical two thoughts here to leave you with, the most critical things to keep in mind in the back of your mind is the size of the initial trailing stop. That's probably the most important variable, and the other is your initial share size that you put on in a trade. Now I'll often snowball or scale in or position size my trades up to several hundred shares by the time it's all said and done. But I often start off with small 50 or 100 share trades. And that's a perfect combination with this OTO orders approach, because it lets you start off with minimal cost if you're wrong. Do the math. If I get stopped out 20 cents on a 100 share trade, that's $20. But over the dozens of times I've tested it the last couple of weeks, it's worked spectacularly to shave off part of the cost of being wrong, as well as lock in profits and get me a lot more break-even exits, or much smaller stop loss exits even than my initial stop loss. Because so let's say you got a 20-cent stop loss and it runs up and then it beats it by a dime or so and then rolls down. At least your stop cost total might just be a dime or so, which is very tiny. So anyway, OTO orders. I'll be sharing more on this and how it works. And again, for more, be sure to visit tradingtheopen.com. That's my live trading room experience at www.tradingtheopen.com. It gives you a good opportunity to see exactly, let me move this over here so you can see. Go to tradingtheopen.com and you can do a trial for a whole month for just $47. I got various membership plans. I think one of the reasons why I've been trusted by so many thousands of traders over the last 20 plus years, is because I don't blow smoke up your butt and say, hey, I'm making $5,000 a day and I turned a $200 account into a $200,000 account in just 12 weeks, and you can't. I don't do that. I'm very honest. Often you'll see all my stops and wins, as well as break-even entries and exits at Trading the Open. I show my live account very regularly. You can see 100% transparency of every single trade that I put on. And often I'll have days in which I take more small stops than I have my wins. But the goal is to have your small stops and your break-even exits be outweighed by the profit from modest wins that work out in your favor. So it's all a numbers game. I throw a lot of darts at the market at Trading the Open. I may do as many as 12 or 15 trades per morning. We don't just kind of isolate one or two charts and sit there and watch it like paint dry. The other neat thing is you get the very specific entry triggers that I'll be using in actual real trades I'm doing each morning as well. So we do cover the smaller, lower priced instruments as well, ones under $10, as well as the ones that I prefer, which are like $20, $30, $40 a share. But whatever your favorite type of trades are, I'm sure we'll have them covered for you at Trading the Open. So anyway, OTO orders, that's the thought of the year. It's something, if I could turn back the hands of time and go back 15, 20 years, and currently I'm doing 100% of my orders are these OTO orders, and I plan to continue on with that. So to learn how to use those, at least try out the live room at tradingtheopen.com and see me do actual live conditional trades every single morning, 5 days a week. For most of the 20 years I'd ran the live room, I just did Tuesday, Wednesday, Thursdays, because those are usually the better days to trade. But now, by popular demand, and because of really strong market volatility, I'm running the room 5 days a week, 9 a.m. till 10:30, so got plenty of time to look through charts before the opening bell, get your game plan put together, and follow along and look over my shoulder as I put on real money trades. And I like to keep things relatively safe with about 100 share maximum trades. I may do 200 share or even 300 on rare occasion, but usually it's 50 or 100 shares. And I think that's the right way to learn day trading the right way, or swing trading for that matter, where you're not doing like these gunslinger kids try and trade 2,000 or 3,000 shares of micro cap crap pop and drop stocks. And we don't want those. What we want are stocks that are continuous and have reasonably good volatility, and combine that with tight, intelligent risk management of much smaller share size, especially valuable while you're learning. If you're going from paper trading to real money trading, this is the ideal way to learn, because you start with small 50 or 100 shares is generally considered small for a day trader share size, instead of egregiously, horribly risky 2,000 or 3,000 share trades. That's for morons. Never ever day trade 2,000 or 3,000 shares at a time. You'll just blow up your account that much quicker. At least get some learning in and do small size 50 or 100 share trades as you make progress and figure out the difference between patterns that work and those that don't. And combine that with a careful risk management strategy using those one trigger the other order flow to automatically put in your initial stop once you get your initial order. It's hugely strategically valuable. That and position sizing and really small stops are three of the core things that I urge you to consider trading. So until next time, trade with passion, or at least with a lot of intelligence, and really small stops. Trade wide, not deep, like I say. Trade a number of different instruments, and do well in your trades. So look forward to seeing you at tradingtheopen.com. Bye for now.